Welcome to your ultimate guide to profitable DXY trading in 2024. The DXY, or the U.S. dollar index, measures the value of the dollar against a basket of major currencies. Understanding its movements can unlock incredible trading opportunities, making it a key tool for traders looking to capitalize on market trends. First, let's dive into the fundamentals. Economic indicators such as GDP, employment rates, and inflation play a crucial role in the DXY's movements. When the U.S. economy shows strong performance, the dollar tends to strengthen, pushing the DXY higher. Pay special attention to the Federal Reserve's interest rate decisions, as changes in rates can create significant fluctuations in the index. These indicators provide the backdrop against which all your trading decisions should be made. Next, mastering technical analysis will be your secret weapon. Utilize tools like moving averages and the relative strength index, RSI, to identify prevailing trends and pinpoint entry points. Analyzing chart patterns can reveal potential reversals or continuations, offering insights into future price action. Keeping a close eye on these patterns ensures that you're prepared to act swiftly and decisively, maximizing your trading profitability. Risk management is an essential component of any trading strategy. To protect your capital, set stop-loss orders and determine your position size based on your individual risk tolerance. Trading the DXY can often be volatile, and an unexpected market move can quickly erode your investments. By having a clear risk management plan in place, you are better equipped to weather market storms and sustain your trading journey. Staying updated with global news and events is another vital aspect. Geopolitical developments, changes in market sentiment, and unexpected events can all impact the strength of the dollar. Following reliable news sources and keeping track of an economic calendar will ensure you don't miss any critical information. Being well informed allows you to anticipate market shifts and adjust your strategies accordingly. Finally, consider diversifying your trading portfolio. While focusing on the DXY, it's prudent to explore other currency pairs and financial instruments. Diversification can spread risk and provide additional opportunities for profit in different market conditions. It ensures that you are not overly reliant on a single market movement and can adapt to various economic scenarios. Thank you for watching. By understanding the fundamentals, leveraging technical analysis, managing your risks, staying updated with global news, and diversifying your trades, you'll be well equipped to navigate DXY trading in 2024 successfully. If you found this guide helpful, subscribe to our channel for more insights and strategies on trading in 2024.